Hi, welcome everybody, and thanks for tuning into today's video. Today we're going to be doing part 2 of reverse mortgages. This section is really about for business owners. So if you missed the first video, go on up here to this video here, and you'll see all about reverse mortgages, how useful and how beneficial it is for you. And as full disclosure, this video is not being supported by Home Equity Bank reverse mortgage. I'm receiving no compensation for this. I'm doing this so that you can get all the information. There's so much information around home equity, reverse mortgages. There's a lack of good information. So today we're going to have on a guest speaker to go over everything there is to know about reverse mortgage, especially for business owners for this video. So let's do this today and introduce Andrew Carnes from Home Equity Bank. Andrew, thanks for joining us today, and thank you for that beautiful presentation we gave. I know it was a longer video, but we needed to do, I think, a good video on that to provide so much information as we can. There's so very little information about reverse mortgages in Canada, so thanks for joining us today.
David, it's a real pleasure, and you know, our first session was a lot of fun, and we delved into so many topics, but you know, we can uncover a lot because you know, our 36-year plus experience working with families, we come across every situation. And, you know, we would like to think that our greatest skill is to say that a reverse mortgage does not fit perhaps a particular situation, but then enlighten people where it may be. And this whole topic of business owners is very, very timely because of credit situation and availability in Canada.
Sure.
And we've got lots of experience here, so we'll delve into a case study.
Well, great. Let's get into that first slide, because I know this is useful. I think this is the one you want to start off with. Is that right?
Yeah. So, you know, I think it you know, deserves to be mentioned that a reverse mortgage is an equity-only loan that's available to, I'm going to say, better generation Canadians over the age of 55. They tend to be the population that controls the majority of wealth, shareholder ownership, home ownership as well. So they're the most powerful generation in terms of the overall wealth scenario, and that might be supporting a business. The unique feature, I guess, of a reverse mortgage that really fits business owner culture is the cash flow flexibility. And the biggest aspect of that is that a reverse mortgage on a primary residence requires no payments for as long as a client stays in their home. But that does not preclude people from making payments. So there's no payment required as a base level, and many clients do that. But there also is the ability to accept payments as well. So, you know, where that fits from a business context is if there is a preference to capture a lower rate by doing a reverse mortgage on a primary residence versus the credit available to a business, perhaps maybe it might be a better solution to tie up some of the home equity in order to provide that need. And we've seen this time and time again. If you can put the slide back up, I'm going to point out another aspect that's very, very important is this tax-free event. So the proceeds of a CHIP reverse mortgage loan advance are not a taxable event. And they allow for a person, depending on their age, to get access up to 55% of the value of the clients. We explained in the last video that's not every client. In fact, the younger a client is, starting at age 55, is the lower amount that they would qualify for. It's a lower loan to value is the technical term we use. And then as a client gets older, age 83 approximately, they could qualify for 55% of the value of their house. So it really comes down to the value of the house and the client's age are the most important factors. And then I'm going to tag in one that we did not talk about in the last video, and this is important for business owners, is no requalification. You see, when you have typical business loans or personal loans, there is always the potential that these loan facilities can be called, meaning the bank essentially has the time and right to ask you, what is your current income situation? Show us your balance sheet, in other words, to show us what you're making in your business, show us how much declared income you have on your personal income taxes, and they may tailor their credit or not extend new credit to you when you go along. Reverse mortgage is very different. It's to borrow a term, it's a once and done solution. So what we have is a client qualifies from the day they apply, and they remain qualified for that amount. So how much of the amount they qualify for versus the amount of money they take is really up to the client, but that qualification amount does not change, and that's really, really important. Why don't I skip forward a little bit, and I'll just introduce business owners here, and I'll set the stage by it. But to say that, when business owners are today approaching, Business Development Bank of Canada or whatever the loan company is, finance companies that provide equipment loans, is they're discovering monstrous rates right now. And the reverse mortgage rate is quite competitive. It's actually lower than home equity lines of credit rates right now in the second quarter of 2023. So those that are really in the know are saying, hey, I am going to make my home value available to me as a loan that I'm going to give to my business. And the reason I'm going to do that is because if I take a business loan, there's an automatic expectation from other lenders to derive the cash flow instantaneously. There's no delay. If I borrow $500,000 to buy a piece of equipment, the loan has to be paid the next month. Maybe that piece of equipment takes, many, many months in order to bring on stream in order to do that. So the reverse mortgage has that benefit that there is no payment. So maybe doing it on a primary residence and lending it to the business might be the alternative. And I'm going to show you an example of one here. If we just pull up that case study. This is an example of a wealthy family that owns a legacy printing business that was a multi-generation business. And, the printing business has gone through monstrous changes in terms of the compatibility with the electronic media at the same time, but they are fundamentally very successful multi-generational business. But core to printing business is the printing press, and these are expensive. I learned all about 𝗪𝗪𝗪𝗏𝗪𝗏𝗪𝗏 and all this sort of stuff through some arrangements that the family was looking for. And in this case, they had a choice. Is the cost of financing this current printing press was so high that it essentially generated a call to maybe cash out investments that the family personally held in order to finance, because heck, once they invest in the state-of-the-art printing press, it's going to pay them. So therefore, why not cash out some of the investments in order to provide for that? And that was an alternative, as well as taking a loan from the vendor of the equipment. Fortunately, I got involved in this particular case, and we decided maybe there's a better way of looking at it. Is let's not cash out the investments because of the taxable, in the individual personal taxable dispositions that's going to happen. Is why don't we look at the value of the home and find out for this over $3 million home, if there was a possibility to generate some cash flow from there in order to buy the printing press. And I should mention this printing press. This is a big deposit. It's being shipped from Europe. At this time, sort of in the midst of COVID, the timing wasn't right, but there was a lot of cash had to be put up, and it's going to be certainly a long time before the printing press operates. Not to belittle the printing operations that need to happen in order to generate income. So that could be, and they forecast somewhere in the neighborhood of 8 to 9 months before there's any positive cash flow coming from the business from this new piece of equipment. So what they decided to do was underwrite their $3.3 million home in the Toronto area and essentially find out how much money that they had available to them. Listen, it wasn't just the printing cost, or the printing press cost, it's the cost of installation, the cost of all the ancillary equipment, the computers. We talked about that earlier, David, as these always things seem to be breaking, right? And making sure that was a true state-of-the-art operation. So what we were able to do is provide them a very significant facility to buy outright this printer, and the breathing room. That's the most important thing we provided, is the breathing room, in order for them to do it properly, to get it installed, not to be rushed into getting into this new printing press into operation. it also involved the removal of a printing press that had been there for 40 years. So that's a significant portion of the equation too. Okay. What is the end game? This is a business. They intend to have some cash coming in. Well, the neat thing about a reverse mortgage, or it's an advantage, is that once the business has the ability to pay a dividend to the shareholders, there is a right with a reverse mortgage in order for them to make monthly payments. So there is no requirement to make a monthly payment, but when the time is right or the cash is in the bank, they can begin to service that loan. So with a reverse mortgage, so on a primary residence, they can pay the monthly cost of interest anywhere from it. So if they have $1,000 in extra cash flow coming in from their business, hey, redirect $1,000 to the payment of the loan. If it's $2,000, great. They can pay all the way up to the total cost of interest. Over and above that is that there's an annual right to be able to make a 10% prepayment to the reverse mortgage. So in other words, over a 5-year period of time, 10% of the outstanding balance each year, that could take a significant chop away from out of that. And interestingly, I was told, and I'm not an expert on the tax makeup of it, but the business has the right to write off a portion, the capital cost allowance for the press. In this case, it corresponded very close to a 5-year period of time. So the harmonization of the payments as cash flow comes in down the road to the repayment of the debt is going to put this family-owned business in better stead. So it's just sort of there's not really much more to explain there, but that after a 5-year period of time, the reverse mortgage could be paid out in its entirety. But, with this sharing of this, I'm going to call it lending technology that many have not considered, think of all the people that have grandparents, that their grandchildren or children are in the midst of, opening a new business, coming out of COVID, right? There's point in opportunity. There's leased space available at relatively low rates if it's a retail or restaurant operation. How is that dream going to be realized? And sometimes there's a willing grandparent, as an example, that has the majority of the family's wealth, that is more than willing to step in and make this business dream, a reality for the next generation. So I pointed it as a point of consideration where the reverse mortgage could be used.
Well, I like it because even though theoretically and technically a business shouldn't be started by pledging your own personal assets, but it is the reality of most small business owners is that they have to use their own resources to do that. And so the trouble with that is that you don't have the income yet. You might have projected income, and the bank really doesn't care about your projected income. They want to know who you are, what's your credit worthiness, what are your assets. And it makes it difficult to get a loan to either start a business or to continue funding a business. Here, you don't have to qualify in the area of financial underwriting. All you need is your age and your home to know what the equity is in your home.
Exactly.
It's a brilliant alternative.
Well, it may be the only resort in many circumstances. That's not what we want it to be considered as, because it's actually preferred from a cost standpoint for a business owner. But coming out of COVID, again, look at all the business opportunities that exist for the purchase of, let's say, an income-producing rental property. That might be available at a less, cost. I've been, approached by people that, I can buy a laundromat a lot cheaper than I could 3 years ago. How can I finance that? Because, that level of service is coming back after the pandemic, and the capital cost of the equipment to run businesses like this is quite expensive, but the lease costs for the property are quite low right now, or even outright buy the property if it makes sense. But, it's all about cash flow management. And I couldn't think of a better tool that, with no payment required, just fits like a glove in terms of no cash flow, or the ability to tailor your business cash flow for a phased and considerate repayment of a business loan. So it's definitely an option that a lot of people are considering right now.
early in my career, I've been a serial entrepreneur, and when we started a business, it was very successful, but we used debt to create it because there was so much to get going, so much that we needed to buy in terms of equipment and then also building, that the constant monthly payment of servicing the debt was such a cash drag for the business. And so having known this in advance would have been made it so much easier on our cash flow. So it's now, in hindsight, it's one of the things I would have opted to do. Okay, Andrew, I want to say thanks very much for sharing this information. One of the things that we have to say is, if you're watching this video about the application of reverse mortgage for a business owner, make sure to watch the other video about the full information about reverse mortgage. And getting in contact with Andrew is very easy. A home equity bank. Andrew is going to be able to sit down with you and explain how this works, how it would actually apply to your situation. And I appreciate you taking the time today to go through both the individual and the business owner. It was such valuable information, and this demystifying what reverse mortgage is, especially for Canadians, it's such a valuable information. I appreciate your time today.
Thank you very much, David. Feel free to get in touch with me directly, find out if there is a fit for a business need within your family, for a family-owned business, and we'll direct you correctly.
Awesome. Well done. And thanks very much for joining us. Hey, everybody, thanks for joining us on this video today. If you like this video, remember to smash that like button, share it with anybody you think needs to see this, especially, it's information probably about your mom and dad that might be very useful for them to be able to use their home in a different way. And again, I look forward to seeing you in the next video. Thanks and take care.